So Eugene, thanks for making the time.
Yes.
Um,
Sorry
um,
about yesterday.
no, it's okay. I'm going to start by reading your bio and then we can do the interview.
Yeah.
Okay. Eugene Abungana is a graduate in BCom Finance from Kenyatta University. He is currently pursuing a master's in finance and investment from Leeds University Business School. He has a combined full-time and trading experience of 8 years, including trading in a private fund, Chicago. He currently trades his own funds and is working towards setting up a private trading fund. So welcome, Eugene. I'm joined also by my business partner. He'll be helping me with the questions.
Okay, thank you.
You're welcome. So please tell us briefly about your trading journey and the markets that you trade.
My trading journey is very long. If I'm to talk about all of it, we won't finish. But basically, I knew about forex trading when I was still in high school. Actually, when I was in Form 3. And I went to the cyber cafe. I typed one day how to make money. I saw forex. I saw binary options, and I got interested in learning about forex trading. But the cyber attendant told me, "This thing is a scam. Don't even try to do it." So I never pursued forex again until I was in high school. I mean, in campus in first year. And when I met someone who was trading forex, and he was making some good money then. He had just bought a new red car. I can't remember which car it was. But it really inspired me because he was in campus like me. He had bought a small car, and we are all thinking we all want to do forex because forex is a cash cow. So those days we didn't have many mentors in Kenya. We didn't have people to teach us, people to mentor. So it was more about baby peeps, about online courses, just slowly like that until I was able to start trading. Initially, we were about 8 people. Right now, only 2 of us are still trading. But roughly, I would say it took me about 3 to 4 years to become a good trader.
Oh, hey, Eugene.
I've just tried to summarize it because it's a very long story.
I think we have there a lot of time,
Yes.
Yeah. So you be really free with the story.
Yes.
Yeah. Which year was that? When you guys were starting out in Form 3. When you were starting out in Form 3.
That's 2000 and maybe 6 or 7. But then we didn't start out as a group. What happened is that I went to a cyber cafe after school had closed. So other guys are playing computer games.
Wow.
And I'm there Googling how to make money. So I Google how to make money, and I get forex, I get multi-level marketing, I get so many things that you can do.
Okay.
And I asked the cyber attendant if he knew anything about forex. Then he told me that thing is a scam. Don't even try to do it. So I never touched forex again until I was in campus. I was in Kenyatta University, and as soon as I left high school, my cousin introduced me to online writing. So we used to write articles online. And when I was in first year, second semester, one of my colleagues in our school who used to also do online writing had just bought a very new car, and we asked him how he was able to buy the car. Then he told us he no longer writes; he does forex.
Mm-hmm.
So we all thought if forex can make this guy buy a car, then we all need to stop writing and go and do forex. So we didn't have mentors, but he introduced us to baby pips. We started learning via baby pips. We had some money to pay for online courses. Then we got someone in the CBD who offered to give us a compact disc, like a CD compact disc with the notes on forex trading. But interesting enough, this guy had just downloaded notes from baby pips and put them in the CD. And I remember we paid 70,000 for
Wow.
buy those. Later on, we realized the guy had just gotten everything. I mean, from baby pizza. But since we were many of us, about eight people, we used to help each other. We used to learn together. We used to discuss together. And then we put up together an account of $800. I remember our first live account after demo trading was good. And each one of us was contributing $100. Right? So it was $800. And we would trade combined effort. And I remember we grew the account we almost doubled the account in like a week. And we felt so excited. We've become good traders, guru traders. Huh? So each one of us went the separate ways. I put in my account, I remember I put $1,000. And within the next week, by end of the next week, it was $13,000. So I walked into a car yard and I was also going to buy my own car. So I saw a very nice car and it was going for about 1.5 million. So these guys told me, you can leave a deposit of 300,000, then come for this car next week. Okay. And I told them, no, next week I'll come with cash. I'll give you everything. So the following week, Monday, I'm telling myself I have a target of Wednesday. I need to get the car before Friday, you know. So I start trading and I'm very fast in my trading and
because you want to buy the car.
Exactly, because I want to buy the car. And the same day I was supposed to go get the car. The same day I was supposed to go to make my withdrawal on Wednesday, because if I make a withdrawal on Wednesday, Thursday, Friday, I'll have the money and go buy the car. I was on a phone call. I had taken a trade on USD CAD, I remember very well. And there was some news. I had taken a short trade and the market was going up. The market was very, very bullish. But I had a short trade and the market had gone against me. So what I did, I never used to trade the stop loss. I started adding on my trades, actually hedging. Because I kept convincing myself that the market will come back down. And if it comes back down, I'm going to make a lot of money. So I kept
You are basically adding to a loser.
Exactly. I was basically adding to a losing trade. Yeah. And I blew that account when I was sitting in front of my computer. And it gave me a lot of stress because actually, as soon as I blew that account, the same week again, it was a very bad week for me. Because the same week again, the guys I was working for, the guys I used to write for, we used to have online writing accounts.
Yeah.
So somehow my accounts were closed. And I had writers. Yes, they were shut down. And I had writers whom I had to pay. And I was not able to pay them. So the only option was to sell my computers, because I had more than 10 writers, to sell my computers and pay these guys. So with the balance of the money I remained with, I put it back in Forex. And I told myself I won't do writing again. I want to focus on Forex trading. So I sold my computers, all the money I had, I put it in Forex trading. And I told myself this time I want to try and trade slowly and see how far I'm going to get. But it still didn't work, because by the end of the second month, or maybe roughly into the second month, I lost everything and I wasn't even able to pay my rent. So I had to move from a 2-bedroom to a 1-bedroom. After 1 month, I gave notice again. I moved to a small bed sitter.
Oh man!
After 1 month,
right now, it all sounds funny, but I feel you.
Yes.
Yeah.
After another month, I moved to a single room, and later on, I moved back home.
Wow. and I think I know the guys you are talking about. I won't mention names. The guys who downloaded everything on baby. I won't mention names, but there was someone I was talking to, and and that thing came up. He was telling me how they used to download stuff back in the day. Yeah.
Yes.
And your story reminds me of I don't know if you have read Reminiscences of a Stock Market Operator by Jesse Livermore.
I actually have it, but I've not read it, but I have it.
There is a character there. There is a character in that book.
Yes.
A very wonderful, amazing book. There is a character in that book. They were talking about how the market should make them wealthy so that they can buy a fancy coat. There was this coat which was fancy, it was trending. And so the message basically was, don't expect the market to get you anything. So the guys were saying, okay, no worries. Next week, I'm going to go into the stock market and I'm going to get money to buy the coat. And they basically lost the money and they never bought the coat. You will relate.
is actually the same thing. I have the book by Edwin. Edwin, I can't remember the other name.
By Edwin Lafavia.
Yes.
Yeah,
I have
and
the book, but I haven't read. Yes.
you should really check it out. You'll love it. The storytelling is great. And then
I'll definitely go through it.
yeah, and then another thing you've said on your bio that you are working with this private fund in Chicago. Sounds interesting. Can you take our listeners through that story?
The third year into my trading,
Yeah.
I met someone here in Kenya who was a very good trader, but he was traveling to Australia. So I had asked him to mentor me, but he was traveling, so he could not be able to mentor me. So he introduced me to someone else who was to hold my hand into trading, and the guy was not in Kenya. But I had to pay $2,000 for him to coach me, actually, because what I've not told you guys is that when I went back home, I didn't have enough funds to trade.
Yeah.
So my auntie was building some houses for rental.
Yeah.
And I thought the only way for me to make income is to work for her. So I told her what I can do. I can be your manager. I can be checking over what these guys are doing. So a time came when she wanted to buy gates and the doors and windows, welded doors and welded gates. So I told her, instead of buying this thing, just give me the money. I'll get someone to work on it. But what I actually did is that I bought a welding machine, and I got a welder, and I worked alongside him to weld the gates and the windows for the apartment. So I saved a lot of money and put the money back in trading. And after about 3 months, I had some good amount of money because I had made so much money from every time I would work for, I would save a lot of money during the construction. So I was able to pay this guy $2,000. He took me through a very short course. There was nothing important. Everything is all what I knew. He only helped me to calm down my emotions and to have some discipline in trading. That is only what I was lacking. Then he asked me, are you able to make 2% in a month? If you can make 2% in a month, I'll hire you. It was as easy as that. So I started the 2% in a month, 3-4% in a month. And slowly he gave me an account of $5,000. Slowly it grew to $10,000. By the end of the year, maybe roughly 14-15 months into trading with him, he introduced 2 more guys. We were 3 of us, and we were handling a portfolio of about $300,000 last time. It grew later on. Deposits and our trading profits grew totally up to about $500,000 before he decided to pull out of the business. But he pulled out of the business because of a change in regulations in the US, which required them to have a higher capital base, which he did not have. Yeah.
Okay. Yeah. Wow. That is really, really interesting. So that experience, it basically taught you how to, handle your emotions and, provide you with some bit of mentorship.
Exactly.
And did it introduce you to other markets, other products?
Yes, because before that, I was just trading the 4 basic pairs. I mean, the major currencies. But it introduced me especially to gold and oil, and I became a very big fan of gold and oil. Till death, I still love gold. It's one of my favorite pairs. It also introduced me to indices, a little bit of futures and stock markets, but I still preferred indices, kidogo, a little bit of indices and metals and a few currencies.
Okay, so you don't only focus on the forex, you also trade commodities and the other assets.
Yes, I also trade commodities, but again, you see, I don't trade to make all the money in the world. So sometimes I can decide to focus, depending on my analysis. I can decide maybe this week or this month, this pair is not good for trading, so I want to focus on these 2. Or I can decide this month I look at this 4, this 5. It varies depending on my analysis.
Okay, so can you tell us about how your trading process is like, from how you generate your ideas and how you execute, and get out of the market?
Your holy grail.
Well, if you had approached me a few years ago, I could have answered that question perfectly. But now I've refined my trading to a level where I only need 5 minutes in the market to tell you whether we have a trade or not. I've refined my trading to a level where I don't need to do so much analysis. I don't draw any lines on the charts. I
Uh-huh.
don't draw anything. I look at the charts because from what I've been able to develop systems that
Yeah.
help me when I look at the market within even a minute. I can know here we have a trade, here we don't have a trade. This pair I'm going to wait for the next 1 or 2 hours. So basically, it's the system that does everything for me. But previously, I loved a lot of price action, and I'm not so much of a fundamental trader. I try to keep up with fundamentals to know what's happening in the market, not because I want to use fundamentals to take my trades, but just because I want to know what's happening in the market. But most of the time, I do a lot of price action, support and resistance, some momentum, some velocity trading, and demand and supply. But now I've tried to put all that into one system that now helps me to make my trades.
Okay, so you know, so
Yeah.
majorly, let's say 99 or 99% is price action, technical. You're
trading.
technically driven. And if I
Yes.
heard you well, you talked about systems. A
Yes.
system based on your own discretionary rules, or a totally automated, systematized way of trading.
I tried doing totally automated system as ways of trading, but they didn't go very well with me because you see the good thing with manual trading is that when the market condition changes, you're able to see that. When something new is introduced into the market, you're able to notice that a new behavior has been introduced into the market, and you're able to study it and learn it, and you learn how to trade it. But when you're fully automated, when the market behavior changes, your system will not know the market behavior has changed. It will simply not trade, or it will lose your money. So what I've actually done is that because I tried coming up with robots that trade 100%, and they would make me money and they would lose money again. I've actually lost a lot of money in trading, more than $200,000, just by being an automated trader, fully automated. But nowadays, what I do, I have systems that alert me. They just alert me when there's when a specific condition comes into the market. So when I'm not in the market, I can be able to check what's happening. And again, I have systems that try to follow the trend, try to tell me when the market is ranging, try to do the technical part for me. Now, with that, I don't have to come and draw support and resistance and draw patterns, because the systems now are able to help me do all these things. So from that, I can easily know this market is trending, this market is ranging. And this way I trade will also vary depending on what pair I'm trading and what time frame I'm trading.
So, so you are, from what I'm getting is your trading philosophy, you are a trend follower. You try as much as possible to trade in the direction of the trend.
I try as much as possible to trade in the direction of the trend, but again, a trend in 15 minutes chart might not be a trend in 1 day chart.
Yeah.
So depending on what is happening in the market, for example, maybe a certain pair, like maybe the euro dollar, decides that for the next 2 weeks is going to range on the 1 day chart. If you go down one time frame lower or 2 time frames lower, like on the 1 hour chart, you'll actually find a trend. So within the ranging of the 1 day, in 1 time frame or 2 time frames lower, you'll find a trend. So I try as much as possible to identify these trends.
Okay. Wow. So, and also, you are a day trader. You hold positions for days, or you are just in and out within minutes, or at the end of the day, you are out.
Again, that I mix.
Yeah.
Yesterday, I sold the euro dollar in the morning.
Okay.
Was it yesterday? I think the other day, the 2 days ago, I sold the euro dollar in the morning.
Okay.
And by 2 p.m., 3 p.m., I exited manually.
Okay.
In the evening, at around 9, I took a long trade, which I'm still holding till then. So sometimes I can take trades. If I take a trade on maybe on a 1 hour chart, depending on what factors influence me to take the trade, I can either close it in the day, I can let it hit my take profit, or I can allow it to run for a long time. Sometimes I let my trades run even for weeks, for 3, 4, 5 weeks. It all depends with the pair I'm trading and what influenced me to get into the market. Different pairs, I tell people, different pairs have different market behaviors. And I believe you cannot use one strategy without modifying it in all pairs, in all time frames. It will not work. The way you'll trade Euro USD on 15 minutes chart, you will not be the same way you are going to trade it on 1 day chart. When you go to a higher time frame, there's some modifications you have to change. Otherwise, you're going to lose your money.
Well, I really love your dynamic approach. I also sometimes think, having this identity, it really becomes tricky sometimes when someone asks you, are you a swing trader? Are you a position trader? It sounds political. Are you in this political party?
Yes.
Yeah,
it's like someone asking you, did you vote for Trump, yo?
Eugene,
Yes.
I liked the way you said about, it's not wise to go to, a systematized trading, and yet your manual process is not, on point, because then again you lose a lot of money on that. So given your level of experience, what are some of the rules that you cannot compromise on while you're trading?
First of all, I tell people, the market is a game, is probability, not just forex trading. Everything in life is probability. I don't know if you guys cook, but when you start cooking tea in the morning, there's a probability that the tea will let me talk of maybe rice. When you're cooking rice, there's a probability that the rice will burn. You could get a long phone call and the rice burns, or maybe there's a probability that the rice will just cook well and you're gonna eat it. So life, everything is a probability, and I believe forex is also a game of probability. And because of that, once I've decided I'm going to use this strategy for this year, or I'm currently using X strategy that I'm using to trade, once I take my trades, I let them hit take profit or stop loss, unless certain factors come into play, which are not just any factors, but these factors have to be predetermined. These are factors I foresaw already and told myself, if this and this happened, then I will exit manually. So first of all, I have to take care of my stop loss and take profit. And second is my lot size, how I control my trading. I want to take a very small risk. I want to risk like 1%, 2% total at any one time. I don't want to risk 100, 20%. I'm not looking to make 100% every week. If I make 1% this month, the next month I make 20% is okay.
Okay. I'm gonna be a little bit detailed here. And as you are talking about, I love the fact that you're saying, you play out scenarios in your head, and I think it's very, very critical. So, the factors that you consider, for example, what tells you that, okay, this is an opportunity? Can you have a bit of elaborate example for our listeners so that they can get the gist of how a professional trader like you identifies an opportunity and classifies it? Okay, this is an opportunity, and then goes to that stage of playing out scenarios. An example of maybe a trade you were in recently. Yeah.
That's a very tricky question, but I'm going to try and answer. It's tricky because my trade has been so simplified that there's nothing to trade again. Like, I don't need to do analysis in my trading.
Okay.
I just need to spend 1 minute on the chart. Just open for me a chart, I look at it, and I tell you we have a trade, we don't have a trade. It's been that simplified.
So the first thing is there is a trend. Rule number one, we have a trend.
Rule number one is not whether we have a trend or we don't have a trend.
Okay.
I don't trade a specific strategy because I've learned so many strategies.
Okay.
I've paid for Mauro calls. I've paid for a lot of price actions, including nail full. I've paid for so many courses. So with all these strategies, when I go to the market, I don't go to the market with a mindset of saying I'm going to look for a trend. I just open the chart and I see what the chart is doing. So the chart has to tell me what is happening. So I look at the chart and I'll see we have a trend, or maybe the market is ranging. If the market is ranging,
Yes.
I want to try and also get a historical patterns, because I'm not a fundamental trader. I want to also check what has been happening previously. Then maybe I'll realize that from 2016, maybe August, this market went up to X level. In 2017, April, it came down by maybe 30%. It went up again by 20%, and now it's going down. Maybe this is an M, a pattern forming, a double top pattern forming. Now, in this double top pattern, it's not guaranteed that a double top because it's an M. I've read some books that say when you're trading a pattern like a double top M, double top pattern, your take profit should be at the base. The base, that is the place where the markets, the previous trend began from when it's going up. That is not what I'll do. I'll also try to check the intra trends inside. For example, we have a trend on 1 day chart. I want to check the intra trends on H4 and 1 hour chart to see what is also happening on H4 and 1 hour chart. Then, depending on whether it's a pattern I've taken, whether it's a trending, now I'm going to look at other factors also to try and determine whether this is a trend or not. But like I'm saying, these factors are not things I can really be able to explain on audio unless next time we do a video interview, because my trading has become so simplified, so simplified that I don't need so much analysis.
Yeah, this is really interesting, Eugene. So you basically have this technical analysis knowledge, and when you look at your chart, when you look at the price, it is the price is dictating to you which strategy you should put into action.
Exactly.
Wow. Yeah, it's really cool. Love it. So now, when you do this process, do you have a way of statistically tracking your performance and knowing this strategy is much more consistent than the other? Or for you, it's basically, it's not about which strategy is better than the other one. It's about the way you say that first, probability. How
exactly. For me, it's more about probability. Previously, a few years ago, maybe 2-3 years ago, there's some statistical data we collected with some of my friends. For example, we take strategy A. Let's call it a bullish strategy, right? Assuming we have this a strategy and we call it a bullish strategy. So we decide if you're trading Euro USD on 15 minutes charter, what is the possibility that it will hit a take profit of 50 pips and it will hit a stop loss of 20 pips? And we backdate that for like 3 years. Then we come again and say, what is the probability that it will hit a stop loss of 70 pips, a stop loss of 100 pips, for example? Okay. So we do that for different pairs that you are trading. So we came up with a very big Excel sheet, like a database, that shows me that time, if I take this Euro USD, this strategy, on 1 hour charter, there is 60% probability that it will hit a stop loss of 30 pips if it goes against me. And if it goes in my direction, there's maybe 80% probability that it will hit a take profit of 90 pips.
Okay. Wow.
So that's something I did previously to try and just understand the markets well. But right now, even if I take a pair that I've never traded, it's very easy for me to tell you that this pair, when you're trading, put a stop loss of 20 pips or a stop loss of 100 pips. Because now I'm able to look at it, I'm able to see it very, very fast without a lot of work.
Okay. So can you say you are through these back tests that you did, looking at all those various strategies, and until this level that you are right now, simplifying your outlook on markets, your analysis on markets, can you say that your edge, you have a statistical edge?
I say that forex trading is not supposed to be very hard. I know it's interesting to tell someone that forex trading is easy in an industry where we are saying that 90% of traders lose 90% of their capital within 90 days. It's not so easy to tell someone that now forex trading is easy. But what I'll tell people is that all strategies make money.
True.
There's no strategy in forex that doesn't make money. All strategies in forex make money. What makes us lose is that strategy A has a probability of 5 lose and 5 wins, whereby each loss will give you maybe 20 pips loss, and each profit will give you a 40 pips profit. That means if you make 10 trades and you are losing 20 and making 40, 5, you'll end up with 100 pips, right?
Yeah.
Now, there's another strategy where you're going to lose 6 trades and win 4 trades out of every 10. But if every win is giving you maybe 3 or 4 times your loss. And there's another strategy where you're going to have 7 wins and 7 losses, but maybe the ratio of risk return is 1-to-1. So I believe in the market, we should not compete with anyone. We're not in a competition. Just be comfortable with what you're doing. Every strategy will work out and will make you money in the long run. Stick to one strategy, because if you keep changing strategies, you might end up finding yourself in the middle of the losses of the strategies. For example, if the first strategy is 5-to-5, 5 win and 5 losses, it's possible that your first 5 trades can all be losses. It can be loss, 5 times. Then you have 5 wins consecutively. Or it's possible that you can have a distribution where you have 1 loss, 1 win, 1 loss, 1 win. Or you can have 5 wins and 5 losses. So I just tell people to stick to one strategy, and that's what I do. I chose one strategy and I stuck to it, and I stick to it to death. If I meet you today and you tell me you're making 100% every day, that's okay for you, but I'm okay with my strategy.
Okay. Okay, so yeah, that's really true. In fact, the next question was on risk management and probabilities. So the most important thing is for the trader or the new trader to understand, the rules of probability, and at the end, try to use this, try to think in a probabilistically, in a probabilistically
Yes.
fashion.
Yeah.
Yeah, so that statistically they can have an edge as they trade, as you have said, you might have 5 losses in a row, but statistically you might come out as a winner if you manage your risk well.
Yes.
Yeah. Okay.
That is very true. And also the fact that with managing risk
Yes.
is a little bit of something to do also with your emotions, because there are many traders I meet who are very good traders. They actually have very good trading strategies. But the moment they start losing some little money, they go into a panic and they start closing their trades. What happens in the human mind? There's a book I read. Maybe you've met this book. It's called Trading in the Zone by Mark Douglas.
I always tell every beginner that is a like it, even if you don't like reading, that is just mandatory. It's
what happens in our brains? We have this hormone called it's a stress hormone. It's called cortisol, if I'm not wrong. It's a stress hormone. The moment a stress hormone is released into your brain, you actually stop thinking. You stop making rational decisions. Your thought process, your memory, your rational decision-making process, all of it disappears. So you have to remain calm when you're trading. And you have to understand that the reason why we have profit and loss in a business, profit and loss account, is because both profit and losses are acceptable in accounting. Only that we are trying to make sure at the end of the year, our profits are more than losses. So most people fear losing even a little bit. And that's a big problem in Forex trading.
So from your explanations, we can conclude and say, be a good loser. Can you imagine telling someone be a good loser?
I can just say, I don't know what I'll say about that, but maybe we can also conclude and say that.
So Eugene, you also said that what the most impact that your mentor had on you was how to deal with your emotions. When you're making money, when you're making profits, and also when you're making losses. So for you specifically, how do you actually manage those emotions?
When you're on a winning streak, and maybe you are also sometimes losing money, it's a mixture of emotions. How do you manage them so that they do not affect your decision making?
What I'll say is that everybody can manage emotions, but the issue that we have normally is we fear losing, but we also fear winning. When we start losing, we get into a panic and we start closing our trades, we start hedging, we start adding onto losing trades, and we lose more, right? But again, money is not so common. We love money, but the truth is that 90% of the people out here who are looking for money actually fear money. Because people have a bad mentality of what money is. People don't know what money is, you know. So what happens is that for many people, when they start making some little money, when you have a take profit of $3,000 and then you come back in the evening and find that you are at $1,900, the market is still moving. The moment that the next candlestick opens and it's going against you, you want to close that trade because you're thinking, I'm going to lose this money. That is a bad mentality because people are not used to money. So first of all, people should condition their mind to a level where you know that you can actually lose, and to a level where you know that you actually need money in abundance, and you also need to understand that you also need to stop having the fear of money. There are some books that you can read to deal with your subconscious mind that can help you to get used to money, because the issue is that when you start making a lot of money, you actually get into a panic, and it used to happen to me the first days. I didn't believe that this is me making $1,000 in a day. This is me making $2,000 in a day. I could get into a panic, and after making money for 2 days, I disappear for a whole week because I'm scared to come back into the charts. And this happens to so many people, trust me. But what I basically do, after the moment I learned to accept that I want to make this money, actually, to manage my emotions, I simply follow my trading plan. I don't have a specific laid out trading plan, but I know that if the market is supposed to hit my stop loss, it's supposed to hit my stop loss. If it's supposed to hit my take profit, let it hit my take profit. If I analyze the markets and I say that the euro dollar is going up, and I put a stop loss of $100 and a take profit of 300 pips. I mean, 100 pips and 300 pips. Then I come back in the evening and find that I made a loss. First thing I'll tell myself is that I was right, but the market was wrong. I was right, but the market was wrong, because I actually made my analysis, and when I took this trade, I was sure I had checked out all the factors that I need to look out, and the market was supposed to go up. So if I made a loss, the market was wrong. Then after that, I'll try to check out where did the market go wrong that I had to lose. That is something I'll do that later on after accepting that the market was wrong. Now, if it's supposed to hit my take profit, there are only specific, very few circumstances that I've also defined very well when I can close my trades manually. There are some trades, very long-term trade when I'm targeting maybe 500 pips. That trade can, on euro dollar, it can last for a whole month, sometimes even 2 months. But then the market goes to 450 pips, and I get a situation where I'm completely sure that this market is not going beyond this point. Then I can be able to close that trade manually. But again, after some specific conditions have been met to show me that this market is going down.
These conditions are, technical conditions, right?
These conditions are laid out in my system.
Okay.
Yes.
Okay.
But they're technical conditions. I believe
yes.
There's an argument on whether you can trade on purely on technical trading, and I say yes.
Tell me about it.
I say yes because before non-farm payroll is released,
yes.
there are people who sat in a boardroom and discussed these figures.
Yeah.
There was a secretary somewhere who typed all those reports, and this secretary or this person is paid $1,000 at the end of the month. I am a very big bank. I'm HSBC. I'm a fund manager at HSBC. I'm paid $10,000 every day, maybe, and a commission of 20% on my profits. I'm handling a portfolio of $5 billion. I come and give you $20,000 every month on top of your $1,000 salary, just to make sure, just for you to be leaking out that information for me. You don't even have to send it to me on email. Just meet me over coffee and tell me the next figures are this way. And I place my trades early in the market before the news is actually released. You see, we live in a capitalistic world, and sometimes we might want to pretend that everything is following the due process, but that is a lie. So before the news come out, there are people out there, and the big banks, the big traders already have a hint of what's going to happen. So they've placed their trades they've already placed their trades towards whatever is going to happen. So basically, it's always discounted sometimes.
Yeah. The information is already in the price.
Yes.
Yeah, as Mark Douglas normally says in his book Trading in the Zone, you don't really have to know what's going to happen next. As a retail trader, you don't really have to know. But if you have price data in front of you, yeah, you are good. You're good.
Yeah, the only reason why I follow fundamentals is because I also want to know what is happening that could make the market very volatile. For example, if Brexit was taking place and you didn't know there was a Brexit, regardless of how good your strategy is, you're going to lose your money. Yes.
Yeah, especially, if you day trade, sometimes it's good to follow on, what kind of news is hitting up the market, Yeah.
Yeah, I have a lot of fundamental data, some of it from 1948, 1945, 1960s, but I don't use that to make my trade.
Yeah.
I calculate inflation of every country every month, every country that I trade every month, but I don't use that to make my trade. I just use that to have information.
Yeah, love for knowledge.
Yes.
Yeah. Anyway, how would you classify a good trade? For most guys, even personally, when you're beginning to trade, a good trade is a trade you've made money, in which you've made money. A bad trade is a trade in which you have not made money. And do you kind of have this type of classification, or or do you think the contrary is a good trade is a trade that which even if you have lost money, you have managed your risk well, it doesn't matter?
First of all, before you start trading, you need to understand strategy. And once you understand strategy, you need to decide which strategy you're going to use to trade. And once you pick out the strategy that you're going to use to trade, you need to stick to it and follow it for at least maybe 6-7 months. Tell yourself, this strategy is new, I'm starting to use it. I want to use it for at least 6 months and see if it's going to make me money or not. Because people keep changing strategies. Today you trade with strategy A. After 1 week, it's not making you money. Next week, you have another strategy. What you forget is that this week, out of the probability game, this week was the losing week, and next week is the winning week. So next week, you change into a new strategy, and then by bad luck, you will start with the losing week of that strategy again. So you end up being a frustrated guy, and you just give up on trading. Once you have a good strategy and you have decided that this is how I'm going to be trading, you have your trading plan if you need to have it. A good strategy, a good trade is a trade that falls within your trading plan. So if anything else happens, if you lose the market, we've said the market, if you lose the trade, you are very correct as long as you followed your trading plan, then the market was wrong. Just try to find out what wrong thing did the market do for you to lose. But you are very right, the market was wrong. So a good trade is a trade that follows within your trading plan. Even if you make money, but it was not within your trading plan, that is a bad trade.
Yeah. Awesome. So do you have like a kind of, this question might sound repetitive.
Yes.
Maybe I repeated it, but just take it down the way you will wish. So do you have a sort of a trading philosophy? What do you believe about the market and how it operates, and how has that shaped your trading style? And is your trading style a reflection of this philosophy, which obviously is part of your personality?
I don't know if I really have a trading philosophy.
Okay.
But I'll just say I believe in first of all, I believe in money management. I believe in having discipline in the market. I believe in sticking to your strategy. That is on the part of an individual. In the market, I believe that the market is a little bit random, but within the randomness, we have order. Within the randomness and disorderliness of the market, we have some order which you can use to take advantage of when you're trading.
Oh, okay.
And I also believe sometimes that in the same ideology of saying that the market is random, but within the randomness we have some order, I tell people that in most cases, I know there are so many books that say market is ranging 70% of the times, but that's a lie. Market is actually trending 70% of the times. The only thing is that market is ranging on 1 day chart, but on a weekly chart it's been trending. So market is actually moving in one direction. It's actually easier to, and if today you decide that the market, as long as you've seen there's a bull candle, yesterday we closed with a bull candle, the next day you buy. It's easier for you to make money rather than always trying to trade against the trend.
Okay. Yeah, I think
the market is so easy that we can actually bet with you if you had enough time. If this interview is going to take 2 days, we could actually bet and try to trade by tossing a coin.
Yeah, the coin toss experiment. Yeah, I'm suggesting to our readers. Can you talk about it?
there are different experiments you can do apart from the toss coin experiment. There's an experiment, for example, there's a time I was trying to mentor some few guys.
Yes.
And they told me they were trading using moving average.
Yes.
So I told them from today, every time you find price above the moving average, just buy. As long as it's above the moving average, just buy. Every time it's below the moving average, just sell. But we set up our risk management rules. So we're going to risk maybe 1.5%, and you're going to target 3% or 5% for every trade we're taking. Then I told them if they blow that account, I was going to give them $1,000. By the end of the month, they're not blown that account.
Wow, that's really interesting. Yeah,
it's so hard to blow an account. It's so hard to lose money in forex.
Very hard. They might have not made super profits, but with that, risk management, the 1%, so their chances of blowing an account becomes less. And at the back of your head, the moving strategy works. So probability is on their favor, as long as they're managing.
I've lost a lot of money in forex. I've actually lost more than $1 million in forex, I'll tell you. But it's because of a few things I didn't know. That when I learned about it, I was able to make more. $1 million, not all of it was mine. Some of it belonged to some companies I worked for, like a trading fund.
Okay. Oh.
Yes.
Yeah. Now, if now, what would you say is a starter pack for newbie traders? Giving newbie traders a starter pack. Yeah. What would you recommend?
How to go about it? Yes, first of all, who's a newbie trader? Maybe you first need to understand who's a newbie trader, first of all, then I can be able to answer the question.
Okay. This is someone who is...
Are we talking about someone who completely doesn't know anything about trading?
But interested, but very interested, but, green doesn't understand technical analysis, doesn't understand fundamentals, but they know what Forex is, they know what it entails, but they do not trade.
I tell people to go through baby pips twice.
Mm-hmm.
The first time you go through baby pips, just read it like a book. You won't understand anything. The second time, open a demo account and start reading again afresh as you try to do whatever you're learning on baby pips. By the time you finish, you'll have a lot of knowledge. Then after that, get a good mentor. That is if you don't have enough money to pay someone to teach you. But you see, like there's a time I used to train Forex and I used to charge $1,500 if I'm to train you from the beginning, because I'd feel like that it's a waste of time,
Yeah.
So I'd charge $1,500 for the whole course. That's time when I was when I used to train. But I tell people most of the time, go through baby pips twice. So even if you want me to help you, first of all, go through baby pips twice. Don't come to me and you want me to tell you what is a pip, what is a lot size. You see, I can't do that. But if you have the money and if you are able to get someone who can teach you from scratch, it's also good. But you also need to understand that even if you get someone who can teach you from scratch, Forex trading is more about your commitment. It's not about the person who teaches you. It's a game of your own personal commitment. The more chat time you give, you have, the much better you become in trading. If you're not willing to take chat time, just like flying, you need hours of flying. You need a lot of hours of flying before you are hired to become maybe a commercial pilot, professional commercial pilot. Same thing in trading. You need a lot of chat time. It is only, even if I teach you how to draw support and resistance, I teach you even one strategy that I use. If you don't give your market chat time, you'll forget everything. Then trading is normally a little bit inclined to your personality, in the sense that I can teach you how to trade with moving average because maybe I use moving average. And I teach 10 different people in the same class. After 1 year, these 10 people might still be using moving average, but they'll be trading using very different ideologies of the moving average. That's why you need a lot of chat time, because you will never trade like your teacher. You have different personalities, so you'll trade differently. So the most important thing is chat time.
Okay. We've discussed a lot. You've shared a lot. Thank you, Eugene. And yeah, thanks for your time. I think we will probably have you sometime in the future, and we will also probably do a video interview for people to understand more about the charting and everything else we've talked about. So we'll be in touch, and thanks for your time.
Yeah, thank you a lot, man. This was really awesome.
Yeah, I'm very grateful too. I didn't know I can do an interview like this. Thank you. I mean, I didn't know I can answer questions. You know, we all see exams.
You did well.
Yeah.
Okay, thank you guys, and have a nice time.
Okay, bye.
Bye.
Uh,